right, welcome. My name is Jason Watson with WCG Incorporated. We're a local tax and accounting firm here in Colorado Springs. I am alongside Bud Rainsberger of RWA Partners, a registered investment advisor firm here in Colorado Springs. In our previous segment, on our Bourbon and Business tour, we discussed kind of financial planning in general, and then some of the extra stuff that needs to be taken care of for business owners. When to sell the business, when not to sell the business, how much cash are you taking out of the business, how personal interests can compete with business interests, on all those things. And that's a great video and podcast that we would encourage you to go view and listen as well. This time around, I want to make sure that everyone understands that we're being hosted by Axe and the Oak here in Colorado Springs. They've been gracious enough to open up their bar, so that's why it's Bourbon and Business. And I'm sipping on some nice Axe and the Oak bourbon right here as well. And a couple more of those, I think we'll allow any tax deduction.
Well, as a guest, I can't quite imbibe yet, but I'm looking forward to the after interview.
I'm doing the Coyote Ugly. I'm just holding it to my lips, not actually taking a sip. So anyway, in this segment, we want to discuss selling your business and some of the aspects there. And we kind of touched on this a little bit again in our last segment, but maybe kind of give our viewers and listeners an overview of some of the things just out of the gate that you discuss when a guy goes, hey, or a gal, it doesn't matter, she shows up and says, I want to sell.
Right. So, traditionally we have a built-in relationship, so we know quite a bit about our client.
Okay.
And we know a lot about the business as well as the personal, and so it's a natural for them to come and give us a holler and say, hey, I'm thinking about selling. But in many cases, we're actively planning for it, right? So we're in the planning stage. It's just when somebody shows up with an open checkbook, all of a sudden you start thinking about the possibilities.
Right.
And, and many times you've already spent the money before.
You've already spent the money. I'm paying off the house. I'm getting that car I wanted.
So we're trying to, take a step back and say, what's your motivation for selling, right? What are we trying to accomplish here? Is it health? Is it family? Is it economics? What are the driving factors?
Sometimes it's just that phone call came in and it surprised you.
Right.
And then the dollar signs.
I find the good businessmen and women who are watching their industry have a pretty good feel for what their business is worth.
Sure.
On a general basis. It's a multiple of NOI or something like that, and so they kind of have an idea of the value that they're creating.
Right.
And it builds over time, and you do say, when it gets to X, I'm going to really take a hard look at that. So we got a call last week, for example, and the clients go, well, we didn't think we'd get there this soon, but we got a call and they're dangling some real money in front of us, and we're really interested. So we sat down with them and I said, okay, what are they offering? They said, well, $12 million. I go, well, that's a good number. Simple lifestyle. They're very charitable. They're thinking about, they've done some things in terms of volunteering around the world for charitable causes, and they're young enough where they can really go out and do that. And
Sure.
So it really has piqued their interest.
Yeah.
And, to the point where we think we're going to go through the pain of going through this process and seeing just how legitimate is that offer. Do they really have the money to do the deal?
But even to take a step backwards, 12 sounds like a big number, 12 million, right? Mm-hmm. But is it the right number? Maybe it's worth 15. Maybe you're shortchanging yourself, so those sometimes,
some metrics, right?
Sometimes that gets a little bit crazy because you think this is sunset money, right? I can take this and ride into the sunset.
Right.
Well, you should go get 15 if it's really worth 15.
Right.
And
there's
or
deal
whatever,
structure, right? So it's $8 million cash and it's $3 million in a note, and so you go, okay, well, what's the $3 million note? Does it pay any interest? Well, no. I go, okay, well, that's a negative. So, how much background do they have managing a business like yours?
Right.
Well, not a lot, but they're coming out of Stanford and they got all this money and trying to put it to work. And I go, well, you might think about taking all cash rather than some note on the back end,
right?
And some things like that. So we're just kind of evaluating, like you said, all the things that could come into play.
Okay.
Which is different, for every business opportunity that we've looked at, and I've been through it in my own firm, right?
Sure.
So we've had the pitches from firms around the country, and played the dance, and
Yeah.
and so forth. So we have a really good idea what that looks like, and of course, cultural fits and good things like that.
Yeah, no, it's
do they want you to
huge.
stick around, and what are they going to pay you to do that?
Yeah, it's all about managing risk.
Right.
And in a theoretical world, if we have unlimited time on Earth, we can assume unlimited risk, right? And probably when you're 25 years old, unlimited risk is almost the same as unlimited time. But when you're 55, when you're 60, no, time is now very, very, very much limited. So
Right.
risk has to be managed. So where I was going with that is, you have a $12 million cash offer. You have a $15 million offer with, let's say, 10 in cash and 5 as a note. What's the risk that you're taking on?
Right.
And if you are taking on somebody because now you're in bed with this new buyer, right, wrong, or indifferent,
Right.
you are tethered at the hip.
For some
Your
period of
success
time.
depends on their success.
Right.
Especially if you're not collateralizing that 5 million
Right.
with much other than blue sky and future cash. So you have to weigh all that in.
Absolutely.
For sure.
What's the liquidity on that note and things like that. And, every deal seems to be different.
Oh, yeah.
And like we were talking about from a financial planning perspective, we want to go back and validate, what kind of lifestyle do I have to support with whatever's left over on an after-tax basis. And, risk is something that you don't mind doing as long as you're working.
Sure.
So all of a sudden, making, 2 or 3% in a safer environment isn't very sexy or exciting, but that might be the right thing. And so what does that really do for me, right? If I'm spending $600,000 a year and I need a $200,000 a year, that's what I can get from the assets today. It's a different story.
Right.
We're trying to validate, does it make good sense to do that?
Right. Yeah, we talked about that earlier in another segment about selling too soon.
Right.
Right. Given someone's burn rate or their inability to adjust lifestyle,
Right.
especially that dramatically. I mean, going from $400,000 a year to $150,000 a year is a big deal. Going
Right.
from 400 to 350, maybe you just don't take as many trips to Fiji.
Right.
But
I mean, most of us, we would say, hey, I can live on $100,000 a year, right?
Right,
So,
right,
why are
totally.
you complaining about $500,000 a year? We don't maybe necessarily run in that circle, but it's as real to them as it is to us.
Oh yeah.
And
for sure.
I think, for me, I've always said Plan F is a trailer in Scott City, Kansas, because you can live really, really cheap in Scott City, Kansas, and nobody really cares.
Yeah.
But really, that's not what we're planning to do.
Right. No, for sure. All right. So let's say we have somebody who says, I want to sell my business. I don't have this person waving a big check in my face. So I have some years ahead of me to whip things into shape. What kind of things are you whipping into shape?
Well, that's where really bringing in the accountant makes perfect sense, right? And hopefully there's, maybe in the business there's a controller or something. I mean, many times the business owner is reluctant to share a lot of the things going on with the controller that they're really trying to achieve.
Sure.
So figuring out how that
Privacy becomes into
relationship
play,
is,
yeah.
Privacy and knowledge, and then, bringing in the accountant to go, okay, here's what we're trying to achieve. What do you see happening? And where can we make those, reduce expenses or headcount, things like that we're trying to, I don't want to say, put lipstick on a pig, but how do we kind of build up this business ready to sell?
Kind of lean it out
Absolutely.
a little bit.
That makes
let's
sense.
take some of the owner, perquisites, the perks, and
At least know what they are so I can add them back at time of sale.
Correct. Right? And you clearly identify them without telling somebody, oh, just add 50,000 onto my discretionary cash flow. That's kind of what I pull out on the side between meals, cars.
I can't say anything because I'm a business owner and I do that, right?
Exactly. So yeah, we have to set that up because
Right.
if you're buying someone's future cash, you have to show them there's all kinds of cash available.
Right.
And
it's
you
a
can
multiple of
project
cash
that.
flow, right? So if I can find an extra 50,000 of cash flow and I'm getting a 6 or 8x, that's worth some real money.
Totally, exactly. So I agree. So we have to whip these business owners into shape.
Mm-hmm.
We have to probably pull some of those personal quasi-business transactions out of the business.
Right.
And normalize some of your data. Maybe you own the building and the rent is a little too high. Maybe the rent's a little too low, whatever.
Yeah.
A lot of normalization of those kind of expenses to arrive. And we want to do that today so that 5 years from now, it's good history. You know, it's funny when I see financials or tax returns and they just take a left turn or a right turn, whatever. And all of a sudden they're making way more money, you know, than they ever have. And revenue's the same, right?
Right.
Yeah, they haven't squeezed a bunch of nickels out of this thing. They just changed their financials a little bit. Not cooked the books, but just identified clearly shareholder distributions
got a conscience
over expenses.
or what?
Exactly. But it's like, oh, you're looking to sell.
Right.
You know, you're trying to lean this business out and have every dollar be completely accounted for and not have the murky dollars in there that buyers don't want to pay you for, but you certainly want to get paid for it because it's cash that you're using to support your lifestyle that a new owner could do as well.
Right, and that's, you know, just trying to figure out what those are and clean that up, as you say, and then get probably a more realistic valuation number.
Yeah.
And then actually have to take that on the personal side and say, well, you know, I was running a car lease and a lot of lunches and some travel and so forth that if I'm gonna keep doing that, I got to add it to my personal expense side. Right?
Totally.
And so if that's 20 or 30 grand, and I don't have them in my budget, and we're trying to validate what is it going to cost you to live, we need to make sure that number gets moved over.
That's a great observation, and one that I don't see very often either, is where, if we are taking a bunch of money out of this business, and we are trying to pretend this family budget is what it is, we have to adjust that new family budget to account for those quasi dollars, if you will, those quasi deductions that are maybe gray between tax deduction and distributions.
And you're going to have to make some decisions. I really don't want to help pay for all my flying horse expenses. To the extent I have bribed my accountant to do that. Now, is this being recorded somewhere? I mean,
for our listeners and viewers, Flying Horse is a golf community up in northern Colorado Springs, which we're actually building a new office in. So there's some
it's going to look great. I can't wait to see it.
And one of the things you also mentioned too is not just cleaning up the books and the tax returns, but just cleaning up some of your long-term obligations and liabilities. Do we have some? Because that's a part of due diligence when I help somebody buy a business. Is I go, hey, is there any off balance sheet contractual obligations that we need to be aware of? If do you owe some manager a bonus that's going to come bite me in the butt because now I'm the one paying the bonus, all those things. You want to probably get some of that stuff cleaned up.
Yeah, I think, I mentioned, one of our clients that sold their business in Chicago area, and, it was probably had all the complications you can think of, right? He owned real estate, he owned equipment personally, he had a partner that, was no longer there that owned 10%, that he had to figure out what his distribution would look like and when do you pay it, pre or post, and then do I want to own the real estate or do I want to sell the real estate? You got to have that as a separate transaction, things like that. And so we went through a lot of variables to get to a point where we kind of added up the different pieces and thought, okay, that was a deal that he could live with. That's
awesome. Yeah, that is tough when you start to chop it up, where you have like the silent investor. What do you want to do with that individual? Is there a wholesale clause in their buy-sell agreement? And what's the valuation? Do they get 10%? Or is it, hey, do we discount that for lack of control and lack of
and a lot of times it's planning for 3 years from now. Maybe I should buy out my silent partner now at a known price with the expectation that if I grow at 20% a year for the next 3 years, I really don't want to share that future growth with the silent partner. Not trying to be mean or cruel or anything, but maybe it makes sense to buy that person out, replace that with some debt. That doesn't have an equity participation, and those are all part of that process. And I think that's the thing that we try to help our clients is if they're not thinking about it, if the accountant hasn't brought it up, let's talk about those kinds of issues.
Yeah, those are huge. And whenever I see people in partnerships, multi-member LLC or whatever, and they're not married to each other, so they have competing personal interests, at least on some levels, just naturally. I'm always like, what's the agreement? What's the operating agreement? And more often than I'd like to think, they don't have one at all, or they've bought some boilerplate one off the internet, 5 years ago, and everything's great. And marriage is all about love, and divorce is all about money. And when you go through a business divorce,
right.
whether you're amicable and you're like, hey, we're in partnership together and now we're going to sell, how does that look? And if you don't have the agreement back when it was easy and about love, and now it's tough and about the money, it's really hard to get people to negotiate in good faith.
And making sure documents are up to speed and they're actually signed and dated and things like that, little things like that.
Oh, yeah.
Really make a difference. I have a partnership. I bought with a group of 20 clients 27 years ago, 4 quick shop stores in Lincoln, Nebraska.
Okay.
And we are just selling them this month.
Wow.
27 years, collecting triple net lease income. Everybody's extremely happy. But like you said, I had to go back in the file and figure out, okay, where's that operating agreement that tells me the process that we can use to, validate the sale amongst the partners, and what's the split look like, and, all that kind of stuff. And it had been so long since we had actually looked at those, I had no idea what it really was.
Right.
The good news is I get a nice cut of the profit. So I'm happy.
So you found the agreement that you like.
Well, it was the original
like
one.
4 or 5
It's like,
of
boy, I
them.
was pretty smart back then.
So we're selling the business. That can take on all kinds of different shapes too, right? I mean, we could get that sunset check where, hey, here's a check, see you later, hit the bricks. Or oftentimes it's got some structure to it, and it might more look like a merger. For example, you might say, hey, I'll buy another financial advisory firm. I'm going to give you X in cash. I'm going to give you Y as a note, or you're going to take back a note for Y, and then I'm going to work for you for another 10 years at Z, and that's going to be my downline compensation, So it's not, business sale doesn't always mean getting out of the business.
Right.
It just might mean, hey, I'm changing my role. I still want to be paid a certain amount or whatever, and that can factor into that too, right?
Yeah, absolutely. And then you've got typically something about, client retention and revenue growth that's tied to some of those numbers.
Some guardrails.
Yeah,
like, hey, if revenue drops off more than this, then it's a
Price
reduction in
adjustment.
note.
Yeah.
Usually that's how you see that. It's a note reduction, and if revenues go up, and
there's
you
an
can
incentive for you
isolate
to
that
stick
revenue
around.
to that new revenue that you bought, then there's an incentive for that to go up as well.
Yeah.
So what else did you want to add for our viewers and listeners about selling their business?
Well, it's an emotional event, right?
It's huge. It's their baby. It's what they grew up on.
Sometimes it's just recognizing that we've gone from the youngest person in the room to the oldest person in the room, and you just like 2 finger clicks, right? It's like, how the hell did that happen? And so it's understanding that it's time. Do it when you're healthy. When you're, what we've experienced in our careers is people have waited too long.
Sure.
And weren't able
or
to
the
go
buyer
and
pool
enjoy
shrinking
life.
up.
Right. There is fewer and fewer people, but so we want to encourage our clients to look at these things, right? Don't be afraid of it, but see, hey, am I ready for this emotionally and financially, and if it's the right time, go enjoy life.
Some of the emotional side of it is a challenge. I'm 47 years old. Right now, my fuel is working for WCG Inc. and doing all that stuff. And I don't know what I would do with myself from day to day. Now, of course, I'll find things to do, but will it be my fuel, right?
Right.
And will I drive Tina crazy?
Well, probably yes to that.
It
probably is
I'm
already
sure,
happening.
Yeah, I was going to say, I'm sure it's already happening. But we can't and I think, again, given your experience, that adds a lot of value to your counsel, because I think, again, a lot of people just look at the black and white and don't see the downstream emotional conflict now. Like, what's going to happen to the marriage now that there's all this free time? And what's going to happen to the marriage when now there's more of a financial throttle or bridle on the spending and all those things? And people get through it, sure, but you have to address it.
Right. I have a client, he's a couple years younger than me. He was done, right? And
just checked out of his business mentally.
really spent 20 years preparing him for that moment.
Okay.
And it worked. The plan actually, with twists and turns, worked. So he's now teaching a science class at Cheyenne Mountain High School, right? Loves it. Just happy as can be,
Yeah.
That's just probably, one stage in the journey.
Yeah. No, I'm like that too. I always say, hey, what's my next chapter?
Right.
Do I help other CPAs grow their business? Do I go teach small business accounting at the
Right.
local college because that's a sorely lacking subject?
Right.
There's a lot of things you can do, certainly to
think
give
so.
back, and provided you can do it on your own terms too, because.
Right.
You just came from a job. You don't want another job.
Well,
and this job was tough.
Well, they say working ain't all it cracked up to be.
Right, exactly. Well, I always laugh too because people say I want to own my own business. I'm like, oh no. You, I'm sorry, no one told you this, but business ownership doesn't mean you own the business. It means it owns you. That's where the word ownership comes in.
Well, that's exactly right. You've got, so many people maybe depending on you to make good decisions.
Yeah.
Right. That not only your livelihood but theirs too.
Yeah.
They're counting on you to make the HR decisions, right? They know when somebody needs to be out the door because
Right.
they're causing too much strife. And
Right.
if you can't figure it out, they do.
Right.
And so, all of a sudden that comes into play. You don't learn that right off the bat. It takes time to figure that out.
Totally. No, I agree.
But, like we talked earlier, my son Chris is in Steamboat.
Yes.
And so he loves construction and he's a builder. And so we've worked, created a company. And so I'm really just enjoying, that aspect of it. So I talk to him almost every day, which is part of that whole transition over time.
Yeah. No, I agree. I think that's awesome to be able to see it in the beginning because
Right.
far too often we only get the call at the end, or at least middle to end,
Well, you're trying to plan it on your terms, right?
Right. No, you're right. So to recap here, just, talking about selling your business, is timing right? We don't know. We have to look at the plan. We have to look at, do you have enough assets to support your lifestyle?
Right.
Is there going to be a lifestyle shift that you're willing to accept? All those things. How's the structure? What's the risk with this new structure?
Mm-hmm.
Are you taking some back as a loan? Okay, what's the risk in that loan? Can you maybe sell that loan to another bank? Who knows? All those little things go into it. So timing, is it right for me now? Am I getting what I should? All those things. Business valuation's huge in determining that. We also need to, of course, clean up the books, clean up the tax returns. Again, books are designed to maximize value in some respects. Tax returns are meant to minimize tax, and sometimes they don't always agree, and we have to make sure that we're showing good value in both the
Right.
tax return and the financials. And then we talked about those contracts as well, cleaning up the employee contracts, any kind of long-term trigger obligation.
Absolutely.
So,
Know what they're getting and know what we're giving them.
yep, exactly. And then, then what do you do after the sale? The emotional response, because for me, it's my fuel. I get up in the morning, I think about business, and there'll be a day when I wake up in the morning, I think about fishing, but and hopefully that'll be my fuel. But right now, I can't see it happening.
Well, now you've located right across from the golf course, so I can't imagine you wouldn't at least try to swing the club once in a while.
But I'm more of a dirt biking guy.
Well, that's okay too. I like
with the
that.
bourbon drinking problem. I'm teasing. So anyway, Jason Watson, thanks so much for joining us, Bud.
bet.
Again, Jason Watson with WCG Incorporated, local tax and accounting firm. Bud Rainsberger with RWA Partners here,
Thank you for
also
having
in
me.
Colorado Springs. We're hosted by Axe and the Oak here, also in Colorado Springs, part of our Bourbon and Business tour. And we'll talk to you real soon. Thank you.
Right.